Luthra also joins us with leaders from industry body FICCI on their budget verdict.
Finance Minister Nirmala Sitharaman has delivered the interim budget. No big bang announcements as were being predicted, as were being spoken about. The government has stuck to the path of fiscal consolidation and good macroeconomics. Joining us right now is Subhrakant Panda, former president of FICCI and managing director of Indian Metals and Ferro Alloys. Anant, Goenka, vice president, vice chairman of the RPG Group. Gentlemen, thank you very much for joining us. Subhrakant, if I can begin with you, how do you see the budget? A lot was being discussed about PM Kisan, about capex growth to the tune of maybe 30%. Are you disappointed, or are you feel that it's good that the government has stuck to the rule book as far as the interim budget goes?
So, I think it's a very clear articulation of intent on the part of the government, with the finance minister highlighting the accomplishments over the past decade or so, as well as charting out, the trajectory for the, going ahead. And in that context, the clear articulation of the the areas of focus, which is the poor, the women, the youth, and the farmers, means to build on their capability and empower them to contribute to Viksit Bharat. I think all of that was laid out very, very clearly. And in that context, I think taking forward the Viksit Bharat journey further, the focus now is on getting the states on board. And to that extent, the 75,000 crore outlay for milestone-linked reforms, I think is a good measure. But specifically on the capex question that you asked, I don't think it is something that we should be disappointed, because keep in mind that last year was a significant 33% hike to 10 lakh crores, and a further 11.1% hike on that record number is not something to be scoffed at. I think the government has done a very good job of doing the heavy lifting and providing support to the economy when it was needed the most. And now the finance minister has acknowledged in her speech that private sector capex is starting to pick up, and buoyed by tax receipts, etc. What they're looking to do is cut back on the borrowing so as to give headroom to the private sector to fund its own expansion plans, etc. So, I think the public and the private capex working in tandem is what will take us forward. But most importantly, I think from an industry perspective, and indeed on the larger perspective of the economy, is the commitment to fiscal prudence. So containing fiscal deficit at 5.8% for the current year, and bringing it down sharply to 5.1% forecast for FY25, I think is something which is absolutely commendable.
Right. Let me go across to Anant Goenka, Vice President of FICCI at this point. Anant, what do you feel about this path that the government has taken, especially the commitments, the targets around fiscal deficit of 5.8% for FY24, 5.1% for FY25. So do you feel that this is a government which does not want to fall for populism, which wants to stick to the path of fiscal consolidation, good economics? And as far as the RPG Group goes, are there certain announcements in the budget which make you excited, make you more confident?
Right. I think this reflects a lot of focus on continuity by the government, the fact that they're continuing the journey on fiscal prudence, especially in an election year. So to me, it's a very positive sign that they're continuing to stick to improving on fiscal prudence, and better than what was expected. So that's very positive. With respect to the RPG Group, I'd say the positive has been the continued investment in infrastructure, highways, which bodes well for our company, KEC International. In addition to that, I'd say the infrastructure spends are very well divided across the board, whether it is roads, ports, railways, all areas of infrastructure are being looked at. And I think that will have a positive impact as a multiplier on the economy, as well as infrastructure companies across the board.
Right. Let me go back to Subhrakant at this point. Subhrakant, just yesterday we had seen a reduction in duties on certain components. This was with regard to the mobile phone division. Now, when it comes to adjustment of duties, reduction of customs duties for the sake of Atmanirbhar Bharat, we didn't hear of too many announcements, but the push towards green energy, the push towards solar and renewable schemes, how do you see all of that?
So, the finance minister articulated in her speech that in keeping with the tradition of vote on account, there are no direct or indirect tax proposals contained in the interim budget. But I guess from what was announced yesterday for the mobile phone sector, etc., is something that was needed for a very, very important sector, one which has grown rapidly. So that's where that stands. But clearly, coming to the question you're asking about green growth, I think all of us agree on one thing, that what we need is not just growth, but sustainable and inclusive growth. And the interim budget had clear directionality on both, carrying forward the good work of the government of previous budgets. So when it comes to sustainable growth, the viability gap funding for up to 1 gigawatt of offshore wind, the emphasis on EV ecosystem, including charging infrastructure, public e-buses for public transportation, and not to mention the rooftop solar scheme for households, which will benefit 1 crore households, if I'm not mistaken. I think these are all very, very significant measures which shows India's commitment to the energy transition initiative. And this is something, keep in mind, that has the emphasis and the push from the very top, with the Honorable Prime Minister, making it a hallmark of his government, and talking about initiatives like LIFE, which is lifestyle for the environment. So there is plenty of steps in there in terms of directionality, in terms of vision for sustainable growth, and from an inclusivity perspective as well. Looking out for those at the bottom of the pyramid, and that is something that I think all of us support. That where help is needed, it must be provided. So and not just right. In that manner, but also creating opportunities through the R&D fund, etc. I think sustainability and inclusivity are the hallmark of not just this interim budget, but sustained action over the past several years.
Right. Anant, Goenka, does this budget in a way give you confidence about capex deployment, about the private investment cycle?
No, absolutely. I think, as Subhrakant mentioned, this is already on a high base of 33% increase that we saw last year. We are seeing a further 11% increase. Implementation of projects has been excellent. If you look at the number of kilometers of roads that are being laid, is the highest ever that we have seen in the country under Minister Gadkari. So to that extent, not only are projects or investments being announced, but they're actually being implemented at a great pace. They have been very targeted investments also that have been announced. Corridors for certain elements such as cement and minerals that were announced on the railway side, port connectivity, decongestion of high traffic zones. So each of them are very focused and will result in high ROI as that investment as well. So to that extent, it will bode very well for business. It will bode well for the auto industry, for the infrastructure segment, as well as decongesting the entire logistics space, where India has some area to cover. Logistic cost as a percentage of GDP is around 14%, and through Gati Shakti, the government is looking at single digits. So all of this will help in various sectors across the board.
Thank you so much for joining us, giving us your views on the interim budget, and how do you see this encouraging the private sector to invest more in the coming months. Thank you once again for being with us, and that's a wrap of this broadcast for the moment, but our live coverage of Budget 2024 continues on CNBC TV18. Keep tuning in through the day.
Well, it continues indeed, Parikshit, but we have to take a short break. Don't go anywhere. We're back with our budget special coverage on the other side.